Hi students, welcome to the video on financial accounting, the most important chapter, single entry system of bookkeeping or accounting from incomplete records at your fingertips. This is the second video. In the first video, we have already covered the theory portion and some problem also we solved from double entry system bookkeeping of 12th CTC course. So, first you should recall what are the points to be taken into account for preparation of statement of affairs method. Conversion method is not in their course. So, in the next videos we will discuss those for +3 commerce students, then chartered inter, costing, company secretary, financial accounting, MBA, BBA, that is very helpful for them. So both statement of affairs method and conversion method is applicable to them. For +2 commerce, only statement of affairs method is their syllabus. So first, opening capital calculated from opening statement of affairs. It is just like balance sheet. On the left hand side you will write the liabilities, on the right side you will write all the asset. We will total the asset, deduct it from the liability, the balancing figure is the opening capital, that will be right. Again, closing capital calculated from closing statement of affairs. Again, the statement of affairs, on the left hand side the right hand side asset, we total the asset, deduct the liability, we will also get the closing capital, that is capital at the end of the year. If opening capital is less than the adjusted closing capital, so we have to prepare the adjusted closing capital, that is closing capital or capital at the end of the year, at the drawing if any, less additional capital introduced in the business during the year. Then we will get the adjusted closing capital. If opening capital is less than the adjusted closing capital, then business is earning net profit. If the opening capital exceeds or is more than the adjusted closing capital, business is running at a loss or suffering from loss. So interest on capital calculated on the opening capital for 12 months and additional capital if any from the date of investment till the end of the accounting year. Interest on drawing is calculated for 6 months. If the date of withdrawal is not given, it is given, then accordingly we have to do. So item to be added to and subtracted from profit before adjustment. So after getting the net profit or net loss, we can write this is the net profit or net loss before adjustment. Then we have to adjust so many items. First is interest on drawing. So interest on drawing we have to add it, or interest on investment, that is income. So we will add. Undervaluation of asset. If there is undervaluation of assets, then definitely our net profit decrease. So we have to add it. Overvaluation of liability, also our net profit decrease, we have to add it. Then prepaid expenses or expenses paid in advance or unexpected expenses, that also we paid extra, we have to add it. Then accrued income means income we have not yet received, that we have to add. Then we have to subtract the following items. Depreciation written off or provision for bad and doubtful debt, that means how much the depreciation on fixed asset, that is to be charged, bad debt to be written off, that is to be charged, and we have to keep the provision for bad and doubtful debt. Then overvaluation assets means there is increase in net profit, you have to subtract. Undervaluation of liability means increase in net profit, that we have to deduct. Then interest on loan, interest on capital, we have to, this is our expenses, indirect expenses we have to deduct. Outstanding unpaid expenses, that also it is pending, we have to pay it, so we have to deduct it. Income received in advance or unexplained income also we have to deduct it. Then we will solve one problem. It belongs to double entry system bookkeeping of +2 second year commerce students. Problem number 20. So preparation of revised statement of affairs, that is financial position of Raman as on 31st March 2025 were first liability bills payable 10,000, sundry creditor 1,20,000, then capital 3,40,000, total comes to 4,70,000. So assets stock 1,50,000, cash 20,000, bank balance 50,000, bills receivable 70,000, sundry debtors 1,20,000, furniture 60,000. During the 6 months ended 30th September 2025, this is opening capital. During the 6 months ended 30th September 2025, his position was as follows. His cash position improved by 10,000. So cash in hand was 20,000, you plus 10,000, so closing cash in hand is 30,000. Bank balance where it is given 50,000. Okay. Then stock decreased to 1,30,000. Decrease to decrease was there is default. Decrease means it became 1,30,000. Here from stock value was previously 1,50,000. Now it is decreased to 1,30,000. So there is reduction in the value of stock to the extent of 20,000. Debtors reduced by 20,000. By means from the debtor we have to deduct 20,000. 1,20,000 is the opening debtors and debtor. 20,000 we have to deduct to get the closing sundry creditors. Sundry creditors were same as on 1st April 2025. So sundry creditor was 1,20,000. It is also same. Then there was no bills payable outstanding. Bills payable 10,000 opening was there. It is not in the closing liability. So the balance of furniture was 35,000. That means out of 60,000, the remaining is 35,000. So furniture costing 28,000 sold for 20,000. So there is a loss of 10,000. Furniture costing 25 sold for 20,000 means there is a loss of 5,000. So there was no change in bills receivable. Bills receivable remaining same, that is 70,000. The furniture was sold on 30 September 2025 at the end of the half year. So it was estimated that furniture depreciated during the period at the rate of 10% of the original cost. From the above information, calculate profit loss of Mr. Raman. Also prepare his statement of affairs after adjustments. So here we have to calculate the closing capital first. Closing capital. So we have to prepare a statement of affairs at the end of the year. Statement of affairs at the end of the year. We have to prepare first. Statement of affairs as on 30th September 2025. 30th September 2025. So liabilities amount, then assets amount. Liabilities, then amount, assets, then amount. See, so we will do from asset side. Stock was 1,50,000. Stock decreased to 1,30,000. So first we will write furniture. because in order of permanence we are writing. Furniture was 60,000. Out of that, furniture sold was 25,000. So furniture will write 35,000. Furniture, clothing furniture is 35,000. Then stock, 1,50,000 reduced to 1,30,000. So stock will write 1,30,000. Then bills receivable, there is no bills payable. Bills receivable it is same, I think. The balance of sundry creditor were same as 1st April 2025. So bills receivable is same. Bills receivable it was 70,000. Then sundry debtors, it is given debtor reduced by 20,000. So 1,20,000 minus 20,000, this is 1 lakh. Then bills receivable, I have done. Then bank balance, it is same, that is bank balance was given 50,000. Then cash in hand, it is improved by 10,000. So cash in hand 30,000. This is all about the balance sheet and the closing debt assets. Then 5. Four lakh 15,000. Then liability side, bills payable is not available. There was no bills payable, so we will start with sundry creditor. Sundry creditor are same as so sundry creditors. It is 1,20,000. Then we have to write the capital balancing figure. Capital balancing figure. So amount is 2,95,000. So 2,95,000 is the capital. Then we have to calculate the adjusted capital. That is adjusted capital first, then statement of net profit. Adjusted capital. For adjusted capital, we have to take first the closing balance of capital. Closing capital, which is 2,95,000. Then here there are no change in bills receivable. The furniture was sold on 30 September. It was estimated that furniture depreciated during the period rate of 10% per annum. So we have to prepare the profit loss of Raman. So prepare the balance sheet statement after adjustments. So So add less opening capital. Opening capital was, it is given 3,40,000. So net loss before adjustment. Net loss before adjustment. How much? It is 45,000. Net loss before adjustment is 45,000. So 45,000. Then depreciation on furniture at the rate of 10%. So originally it was 60,000. So 10% for 6 months, because it is from 1st April to 30th September, 6 months. No, 60,000, 10 for 6,000 divided by 2 means 3,000. Depreciation 3,000. So it is 42,000. Then profit is, this is minus depreciation. Then add profit on sale of furniture. This is 4750. So total comes to, profit is 4750. We have to calculate, because so total comes to 46,750. Then we will prepare the statement of affairs after adjustment. Statement of affairs after all adjustments. After adjustments. Affairs after adjustment on 30th September 2025. So write, this is liabilities amount, then assets amount. So furniture will write, this is 35,000 minus depreciation. Depreciation is 35,000 into 10% into 6 by 12. So it is 3,500 by 2, 1750. This is 1750. So 1750 will be deducted from this. 1750. So amount will be 33,250. Then stock is same, bills receivable, sundry debtors, bank balance, cash in hand, all are same. So total will be, that is 250, then 4,13,250. Here sundry debtor 1,20,000, and the adjusted capital will be opening capital. Opening capital was 3,40,000 less net loss. Net loss was 46,750. So amount is 250. Then this is 2 lakh 93,250. 2,93,250. So total comes to 4,13,250. This is the answer. So here asset liability tallied. Then we solve another problem. So it is given Rohit, a trader, keeps his books on single-line system. His financial position as on 1st April 2018 and 31st March 2019 are as follows. Cash, bank balance, stock in trade, sundry debtor, building, furniture. So we have to calculate statement of affairs, that is on opening, that is as on 1st April 2018. So we will prepare asset liabilities, then liabilities, assets, amount, then assets, amount. So it is given cash 12,000, bank balance 10,000, then stock 35,000, sundry debtors 30,000, building 40,000, then furniture 15,000, here capital is not given, we have to calculate. So capital we get the balancing figure. Then sundry debtor is given, that is 20,000. So asset side total, opening balance, opening statement of affairs, $1,42,000. So this is 20,000. So it is 1,22,000. This is opening. Then closing statement of affairs we have to prepare. Statement of affairs as on 31st March 19. Here we will change. So opening we have to write first. We'll keep it. Opening capital. Amount is 1,22,000. Here we will change the closing capital. So cash, closing capital cash was 18,000. We will make it 18,000. Then bank balance 15,000. Bank balance 15,000. Then stock in trade 50,000. So we increase it to 50,000. Then sundry debtor 35,000. Sundry debtor 35,000. Then building 60,000. Furniture 20,000. This. Then sundry debtor is given 32,000. It is given 32,000. Now closing capital we have to calculate. So this is total is here 0, 0, 0. $1,00,000. 98,000. So here the balancing figure is, so 1,98,000 means 1,66,000 is the closing capital. So closing capital is given, then what is given we have to see. During the year, he had withdrawn 100 per month for household expenses. So add drawing 100 per month for household expenses. Household expenses. How much? It is given 100 rupees per month means 1,200. Depreciate building by 10%, furniture by 12% per annum. Assume addition to both were made on 1st October 2018. Debtor 1,000 are bad and to be written off. Create reserve for doubtful at 5%. Maintain reserve for discount rate of 2%. Allow interest on capital at the rate of 5%. Interest on drawing at the rate of 5%. Prepare the opening and closing statement of affairs. Here drawing is only 1,200. So we have to calculate the adjusted capital. So 1,200 we add it. So amount is 761. That is adjusted closing capital. This is adjusted closing capital. Then we have to deduct the opening capital. Less opening capital was 1,22,000. Opening capital 1,22,000. So balance is the net profit before adjustment. This is net profit before adjustments. Amount is here 200, then 45,200 is the net profit before adjustment. Then add income and gain during the year. Add income and gain during the year. In the question, it is given interest on drawing. Interest on drawing, that is income. Interest on drawing. Interest on drawing means here it is given interest on drawing at 5% annum. Nothing is given means we have calculated it for 6 months. So drawing was 1,200. Interest is 1,200 into 5% into 6 by 12. That is 60 by 2, 30 rupees. So we'll add 30 rupees here. So it is 45,000 to 30. Less expenses, losses during the year. Less expenses and losses during the year. One is interest on capital. First opening capital was there, interest on capital, that is 5% on 1,22,000, 5% on 1,22,000. So it should be 6,100. So we have to deduct 6,100 first item. Then depreciation on building. Depreciation on building. Initially, the value of building was, at the opening, building was 40,000. So 10% on 40,000. 10% on 40,000, that is 4,000. Then additional was another building 60,000, 60 minus 40, 20,000. So depreciation additional building 20,000, 10%. It is for when it is given assume that addition to both were made on 1st October. So 1st October to 31st March is for 6 months into 6 by 12. So it is 20,000 in 10 per 2,000 divided, that is 1,000. Then depreciation on furniture. Depreciation on furniture. See, furniture was 15,000 from the beginning and depreciation given is 12%. So 15,000 into 12%. It is 1,800. Then additional furniture is 5,000 for 6 months, 12% for 6 months. So it is 600 to 300. So 300 is there. Then it is given bad debt. So debtors 1,000 are bad to be written off. So first bad debt written off 1,000. Then out of sundry debtors 35,000, 1,000 became bad debts. So remaining is 34,000 and provision for bad and doubtful debt 5% on this provision for bad and doubtful debts. So it is 35,000 minus 1,000, 5%. Provision reserved for this doubtful debt 5%. So 5% means it is 35,000 minus 1,000 into 5%. So 34,000, 5% means 1,700. Another provision for discount on debtors. Discount on debtors. This all we discuss or in the video meant for financial account adjustment. So provision for discount on debtor, what we will do, from 35,000, 1,000 deducted 34,000, from 34,000, 1,700 we have to keep provision. So good debt is, that is 32,300, 2% we will keep, that is 646. Then we have to add all this, that is 6,100, then 4,000, 1,000, 1,800, 300, 1,000, 1,700, 646. Total comes to 16,546. So amount was 45 to 30. So 45 to 30 minus this. This is the net profits after all adjustment. So net profit is, that is 45 200 30 minus this, so it is 4 8 6 8 28,684. You remember, as drawing date of drawing is not given, we have to consider 6 months. This is all about this problem. So we can solve another problem also. So I am taking all the necessary steps to clarify all your doubts from this method, that is statement of affairs method on single entry system of bookkeeping or the accounting from incomplete records. See what is given. In the question it is given, Aditya keeps his books on single entry system. Following information closed. Cash at bank as on 31st March 2016, that is opening date given. 31st March 2017 given. Cash at bank, stock in trade, debtor, furniture, sundry debtor, bills payable, investments. Then additional information given. Aditya transport 150 each month during first half year, 200 each month for remaining period from business to his private banking account by way of drawing. 2 power 300 worth of goods for personal use. Aditya sold his household furniture for 5,000. Proceeds were utilized for business. Previously, whatever he had done, it is drawing. Then here, when he sold his household furniture for 5,000 and proceeds was utilized for business, it is treated as additional capital invested in the business. Furniture to be depreciated 10%. Reserve for doubtful debt to be maintained at the rate of 5%. We have to prepare opening statement of affairs, closing statement of affairs, statement of profit loss. First, opening statement of affairs. So we will calculate the opening capital. So asset side, this is assets amount and liabilities amount. Under asset it is given furniture 9,500. So first write furniture 9,500. Then stock 30,000. Stock is 30,000. This is opening balance sheet. Stock 30,000. Then debtor 15,000. Then cash in hand, it is given. Cash at bank is given. Cash in hand not given. Cash at bank is given. It is 36,000. Then sundry creditor is given 27,850. Sundry creditors 27,850. So we have to calculate the opening capital. Capital at the beginning of the year, that is balancing figure. So we will calculate this much. So 9,500 here, total is 500, 90,500. From 90,500 here it is 62,650 is the opening capital. Then we have to calculate the closing capital. Closing statement of affairs we have to calculate. So this is same thing. Furniture assets. Furniture is given 9,500. Then stock given 35,000. Then debtors is given 22,000. Then cash at bank Investment is given 20,000 here. Investment 20,000. Then cash at bank is given 45,000. 45,000. Then liability side it is given sundry creditor 35,400. Then bills payable 10,000. 10,000. So asset type total is 500, 1,31,500. Here difference is capital, balancing figure. This is closing capital. Amount is total should be 1,31,500. So difference is here 100. Then 5 and 6. So it is 86,100. So when we got the closing capital, we have to adjust the statement of profit loss. So for statement of profit loss, first we have to calculate the adjusted closing capital. Adjusted closing capital. Amount is, it is 86,100. Then drawing. So drawing in cash is given. Add a drawing. It is given 150 rupees per 6 months. And each month during first half year 200 each month for remaining period from his business for his private banking by drawing. 2,300 worth of goods for personal use. So drawing is here 150 cash drawing, that is 150 into 6 plus 200 into 6, that is 1,200, 900. Then 2,100 plus withdrawal of goods is drawing in cash, this is. Then in terms of goods, it is also 300. So total comes to 2,400, we'll add it. So we'll get 88,500. Then additional capital entered during the year is given 5,000. Because Aditya sold his household furniture for 5,000, proceeds were utilized for business. That means additional capital. His additional capital is 5,000, that will deduct less additional capital 5,000. So adjusted capital is now this is 83,500. 83,500 minus opening capital, less opening capital. It is given 62,650. So net profit before adjustment. Net profit before adjustment. The amount is 20,850. Then less expenses losses during the year. Less expenses and losses during the year. Depreciation on furniture were there. Depreciation on furniture. It is 950. Reserve for bad and doubtful debt. It is 1100. So total is 2050 have to be rough. So this is the actual net profit after all adjustments. So net profit of the business. It is 18,800 is the correct answer. Okay. In the next video, we focus on another method of preparation of balance sheets by applying conversion method on single entry system of bookkeeping or accounting from incomplete record. Thank you for watching this video. Don't forget to like this video and share this video to all of your friends so that everybody will be benefited. Please subscribe if already not subscribed.